Morning, traders. Wanted to make a video looking at the charts, doing a little weekly analysis, and just wanted to invite you guys in. Maybe, some people are struggling with finding setups, or you're just wondering how other people find their setups. I figured, I would record a video and look at a GBPCAD. I don't know if you trade this or not, but I trade whatever I see a move on. And I think I see a setup, for GBPCAD. So, bear with me here. I'm a swing trader. I like to look at the moves from the big picture. And then, I can drop down to the lower time frames once the move starts happening, and I can trade just like the rest of you guys. With GBPCAD, a little history. A couple months ago, in September, it had a crazy drop. Okay. And just to give you an idea, the price was $16, like 16,000 pips lower than it is now. As you guys know, that the war over there in Ukraine has negatively affected the price. And then the British pound had another slip up, with one of their members that they elected, the female. She concocted this plan. Nobody liked it. The value of the pound dropped crazy. It has since rebounded. But when you get a massive move like that and a rebound, it always presents opportunities. I'm going to be looking at my phone because I have a text from someone who wanted me to also do a video, and I'm just going to kind of merge the video. A lot of times, whenever you guys see me doing concepts or things like that, it's you guys probably feel like I am saying something new, and really, I'm saying something additional. It's not new; it's just additional. So I'm going to go ahead and type this on this chart, and I'll explain it. This is just how the market moves, and you guys may not refer to it the same way, but these are the phases that I like to look for. And I'm not the original creator of these concepts, right? As a matter of fact, the first few times I watched the video that explained these concepts, I didn't know what the hell I didn't know what the hell the narrator was talking about. But ICT has a video on how the market moves, right? And it's essentially, I'm sure, going to say the same thing that I'm saying here, but the internet is a big place, and me and ITC didn't grow up, in the same place. We don't speak the same language. So those of you who have been hanging out in my area for, the last 2 years or so, maybe you can relate to the way I explain it. And I'm going to back this chart out. I'm going to go to the monthly because I believe that you can really see what I'm talking about. So if you look at this picture, I'm going to draw this little channel because I think all of us learn to trade support and resistance. There was a time where I would call this consolidation, right? That's cool. So this is the start of something beautiful, right? This is the market cycle in my mind, right? So what you want to see is you want to see consolidation. Then you'll have expansion, one way or the other. It broke out. There's our expansion. We need to see a retracement to fill these imbalances. Because when you have expansion, it leaves imbalances. And if you don't know what imbalances are, fair value gaps, there are several videos. At some point I will create my own video, but hit me up for a one-on-one. Ask your friend, your neighbor, somebody you talk to on a regular basis. So you want to see the market return to fill these imbalances. Once they return to fill the imbalances, price should return to the level, of the expansion. So I want you to think about this. You got consolidation over here. You have expansion, right? The market is returning to fill these imbalances. Now, this is a long time. This took a long time because this is a monthly chart. But if this is a 1 minute chart, maybe it takes several minutes for that to happen. But the concept is the same. Consolidation, expansion, return to fill these imbalances, right? And then you want to see it return to that area. It will eventually return to that area. But whenever you see a consolidation, expansion, you want to see it return to fill the imbalances. Eventually, it will return to that area. But the fact that we're consolidating above this consolidation lets me as a trader know that we're going to blow through this consolidation. That's higher level stuff, a deeper understanding, but it's an understanding that I have and I've gained through watching, YouTube videos and doing a little back testing and all that stuff. There's no reason for the market to come back and consolidate before this consolidation. And if you think about this as an order block area, or if you think rally, base, rally, base, rally, base, rally, which we broke in this base, we went lower, we came back and retraced, we pushed down, broke this base, we came back and retraced, now we go into consolidation. If you think about the markets like that, on a big scheme of things, if I would go to maybe a year chart or 6 month chart, this is going to look like one candle. You're going to have a red candle, then you'll have a green candle. So this will be an order block going up. Then you'll have a pullback that probably taps into the wick of the order block and the market goes up. I don't want to get off the subject, too much, but I just want you to understand that you have a consolidation, you have an expansion. Now you want to get a retracement to fill the imbalances, and you would like to see the market push back to that area that it left, right? The same way you got the consolidation, expansion, and the market came back to fill the imbalances. At this point, you could have been looking for the move up, right? This moved up, it tapped into this order block, and now it's pushing lower, something different. But we do have the same structure over here: consolidation, expansion. Now we're coming back to fill these imbalances. So what do I see, as far as the setup? So this is a monthly chart, all right? So if you drop down, you're going to see these same thing. This is what we mean by the market is fractal. You're going to see the same things on the lower level. Y'all know I like to trade weekly order blocks. So last week we got the bullish move in it. Last week we got a bullish move. We expected it to tap into this bearish order block, right? I'm going to put a little marking here so I don't lose people. If you don't know what order blocks are, you might be lost. Everybody who's in my group, they understand how I talk. You know, whether you see this as an order block or not, you know, it's an order block to me. This red, this you have a green candle, you got the red engulfing candle, which tells us that the market is going to push back down. Okay. We expect price to push into the order block before it pushes down. And that's exactly what we're getting here. So this week I expect for price to push down. Where the hell is it going? You're ask. So all I want to do, I want to go from where this move actually started, which is this wick. I want to go to the top of this move where we are right now. And the market impulse, it's going to pull back, right? I can expect for it to pull back, you know, around this golden zone area, right? May even pull back to the 78.6, which is ICT's OTE, optimal trading entry. Doesn't matter, guys. Doesn't matter. This is the area that I expect price to pull to. Doesn't mean it's going to happen next week. That's not what I'm saying. Over time, it might just meander on down here, tap in, and then push up, right? Oh, by the way, if you trade supply and demand, you will see this as a demand zone, and price will come tap in and push up. All that stuff is confluence, right? Just bear with me. We'll break this down. So I'm on the weekly. I'm looking for this setup, right? If I see the setup on the weekly, that means I can drop to the 4-hour for entry, but I'm going to just go step by step. If I look at this from a daily chart, right? I look in the same order block area, and God dog, I see chalk. For those of you who don't know what chalk is, it's a change of character move. If I told you, I'd have to kill you, so I'm not going to tell you. No, seriously, you can go watch a video on chalk. You know, chalk is a newer concept, I guess, you know. And when I say new, I'm talking about relatively, you know, like when I first started learning how to trade, nobody ever said anything about a chalk. But here in the last year or so, you know, I've started hearing the concept more. But basically, you have a change of character, which means price comes up and establishes a high, comes down, right? Now it pushes past this high. Immediately, price comes back down and breaks the low. So you had a break of this high, and immediately it broke the low. So what we can expect for price to push up to this candle, oh, that's the candle, guys. It pushed right up to that candle, this area, right? And then we can expect price to drop. Cheerio, mate. What have you here? Oh my God. So where is it going to drop to? This is a 451 pip drop. So that's cool. I think it's going to at least drop to this wick right here, right? Market already showed us in this wick that it was going to push down to this level. So if you trade smart money concepts, you can at least get the move to this low. Now, I already explained to you guys this zone right here, if you remember, was my fib measurement from his high to this high. If we come all the way down here, the next logical step is to fill the imbalance in this candle. The imbalance in this candle puts us dangerously close to the zone, guys. Confluence, baby, confluence. If I'm eyeballing the imbalance from this wick to this wick, just the eyeball test would tell me that it puts us right at our golden zone. So we're going to tap in, bro. Like, that's all I need as confluence. So I'm going to go ahead and slide this pip tool down. So at some point, you know, I don't know, man, Christmas, New Year, maybe before then, I don't know. You know, we don't control the time. We just know what's going to happen, right? We see it. We're blessed to see this move. So price is going to push down here. And, you know, you can put a position in and make 5%. That's a 1-to-5 move. Stop loss is 144 pips. I know you're like, oh man, Todd, you know, it's a lot. I got you, bro. I got you. So again, the setup that we saw is on the weekly, right? It's a bearish order block. Price is tapped into that order block. So if your setup is on a weekly, you're supposed to drop 2 time frames down. So you're not going to really look at the daily. I just went to the daily to kind of show you a little sauce, you know what I'm saying? A little confirmation. So if I go to this 4-hour joint, the 4-hour joint is where you can really get jiggy with it. So if you think about the very concept that we talked about a little earlier, market went up somewhere in here. If I drop down time frames, you're gonna have like consolidation, expansion, right? Pullback to fill these imbalances. Well, some of these imbalances, there's imbalance from this candle to this wick that's not filled, right? Let me drop down to the 2 hour so I can just show you. There's an imbalance here. There's an order block here. There's an order block here. There's a small imbalance right here. Anywhere, price can come to any one of these levels, and I would suspect that it's probably going to push up, tap in, right? It feels this imbalance. That means it taps into this order block directly above it, right? I would bet great money that this is where we'll get our entry for this trade. So I'm going to move it. Boom. Right? So if you remember, this was a 1-to-5 trade setup. Now it's a 1-to-8, right? Now you're protecting 86 pips on the 1-to-8. That means you make 8% on this trade setup. It's going to take forever to make 8%, Todd. Yeah, I know. I know. I got you, bro. I got you. So if you look at this from the monthly standpoint, that means price has to push all the way down and fill imbalances in this wick right here, which it could vary. I mean, that's how the market moves, right? It bounces from spot to spot. So if you think about this move, it went up, it tested these moving averages. It might push back down. I mean, now this might happen fast to whereas it might happen this month, right? It'll push all the way down here and then back up and leave another wick. But my point is we don't control the speed of the move. We can just look at this move. So if we have a trade set up, right? And I see the imbalance, I can take this trade setup that I have marked up just like now. And once it gets to my zone, once this trade gets to my zone and starts and turns and gives me a bearish order block, right? That's a green candle and a red engulfing candle that goes down. Once it gives me that bearish order block, all I have to do is drop down to the 15-minute level. Bam. And when I drop down to that 15-minute level and get that bearish order block that's in my trade setup, right? I can take that bearish order block and I can just use that bearish order block to create a new trade setup. And this is what I mean. This is a bearish order block right here, that little green candle. You got the little green candle, and then you got the red engulfing candle that pushes down, and then price collapse. But when you get that bearish order block, now you can go in here and you can throw you a short tool on it. Get a lot better stop loss, even if you covered this wick, right? Now your stop loss goes from 88 pips to 16.8 pips, right? The area that you're pushing to try to, you can just, this recent low right here, that's a 258 pip move. That's a 15% gain. So now you have a 1 to 15 on your trade, and it'll just push down. And you can take that move to the bank, right? On the pullback on this 15-minute chart, you can add a position, or you can just roll with that one position. 15% is a great account build, right? If you don't want to hold it for 200 pips, just hold it for 100 pips, bro. Right? Hold it till it gets to these lows right here. This is 103 pip. That's a 6% gain. Put 2 positions in, and that's 12% you made in 100 pips. You can get that move easy, a day, maybe a day and a half. If you time it up right, that move can happen in a few hours. This is going to happen, dude. The question I have is, are you going to catch it? It's going to happen, but are you going to catch it? So look for us to get an entry somewhere in here, right? Once you get that entry in here, you drop down to the 15-minute, trade it to this low, right? Put 2 positions in for this low, take your profit. It's going to do what it does. It's going to keep pushing. You can look for another entry. And as long as you're taking profit within this green area, you're going to count it up. Price is going to come all the way down here. It's going to take out all these lows. That's how it works, guys. I mean, it's not any secret sauce. Once we run these lows, once all that, see that big imbalance, it's going to feel all that stuff. Take out this low, it's going to take out this low. We just cleared the chalk area. Now, if you think about what you learned in some other people's class about head and shoulders, there's a shoulder, there's a head. This is going to be the shoulder. It's going to push down. So price is going to push all the way down to this shoulder. Once we down here, we're right next to our golden zone. Oh, look at that imbalance. Look at that imbalance. So we understand that price is going to come. If it's down here, we're going to feel this imbalance, bro. You're going to get all that money. Don't believe me? Hang out. Watch. This is a trade setup. I can turn this into a case study where I can review this on my Swing Traders channel, in my Discord. So if you gain value, make sure you like, comment, and subscribe. This move will be going down. I'm curious to see how long it will take. It may not take that long, but the thing that I want you guys to keep in mind is even if you don't catch every pip or the entire move, man, this is a 800 pip area, man. There's like 779 pips available to you. It's going to be going back and forth. So the lower the time frames that you're able to trade, you'll be able to catch additional moves, right? At the very basics, you can put a position in once it turns, and you can sell it with pretty much, with good confidence, right? If you follow the same concepts that I'm telling you, you might have different rules that allow you to get in and out of the trade, but the concept is rock solid, man. And our confluences, the chalk, the head and shoulders, if you trade patterns and bullcrap, the order blocks will line up. You will see it. If this turns, it's not because I'm using Jedi mind tricks, dude. It's going to turn because that's what's going on, supply and demand, all these concepts, every one of these things are present on this chart. So really, it's just a matter of what you believe, like if you're a supply and demand trader, you see the zone right here, bro. You see there's an order block right here. Price pushes away from that block. All it's going to do is come tap in and go. Then there's a zone right here. It'll go higher than this. It'll break this high. Tap in this zone. It might push down and you'll have a new zone. That's all the price does, right? And how high is it going, you may ask? We've just talked about the consolidation, the expansion to the downside. All price is doing is going back up to fill imbalances, right? Or if you look at this as a break and a retest, it's all the same stuff. We broke, got a consolidation, you broke, now you got to go retest. You either going to survive the retest and push down, or you're going to fail the retest, right? It'll try to break down, but it'll bounce and start consolidating, or it may go out the top side. And then you'll get this same action on the top where once it breaks, it got to come back and retest. Nothing new under the sun, right? If you see it on a higher time frame, it just allows you more pips to play with, but these moves are going to happen, bro. And I just want everybody to have the ability to come eat. You know what I'm saying? Come eat, man. Like, it's too easy. Like, comment, subscribe. I appreciate y'all's time. Let's get these pips.